Hi everyone, welcome to our webinar about buying a first home. I'm Marianna, I'm a property journalist at the Daily Telegraph, and like yourselves, I'm also a wannabe first-time buyer. For almost 2 years now, I've been writing a column for the newspaper about how I'm investing to buy my first home. Over that time, I've had to ask so many people, so many questions, and I'm sure you're wanting to do exactly the same. So hopefully we'll cover everything for you today. And if not, just drop an email to kingsfield.court@landandnewhomes.co.uk and we'll get someone to answer it for you. So here today, we have our three experts. We've got Dean Markle, Sales and Marketing Director at Martin Grant Homes. We've got Michaela Griffith, Sales Manager at Countrywide. And we've got Alex Hyde, Commercial Director at the Mortgage Bureau. So let's kick off with our first question. Dean, do you want to take this one for us?
Yeah,
how does the current Help to Buy scheme work for first-time buyers?
Help to Buy scheme's been in operation for many years now and been widely used by first-time buyers to get onto the property market. The property could be an apartment, it can be a house, it has to be new, and the developer has to be taking part in the Help to Buy scheme. So the developer is qualified to offer the Help to Buy scheme, and there's various different procedures we have to go through as a developer to qualify and be able to offer Help to Buy. It's not just something that you can suddenly decide to do as a developer. In principle, it's an equity share scheme, and with the banks and building societies looking to only lend smaller amounts of money to first-time buyers, it allows you to get a mortgage of 75% of purchase price, take out a 20% Help to Buy, and with your own deposit of 5%, enables you to buy that property. Banks and building societies years ago would sometimes lend up to 95% of the purchase price. Over the recent years, that's not been the case. The government has launched an excellent Help to Buy scheme to help purchasers get onto the property ladder, such as all first-time buyers. And basically, it's a scheme that will run for a period initially of the first 5 years, where that equity is nothing that you contribute towards. After that period of time, you then start to pay an amount of interest on that 20%. That's the scheme in very broad terms. Lots of availability under the Help to Buy website, which does take purchasers through the whole scheme in a lot more detail than we have time for today.
Mm-hmm. And there's also some restrictions on the value of the property you can buy and things like that. So people should look that up.
Yes, there is. There's a change to the Help to Buy current scheme, and I use the word current scheme because we are at the dawn of a new one. The current scheme allows generally people to buy up to a higher value, currently at 600. But once the new first-time buyer scheme comes into account, and it is specifically geared to first-time buyers, whereas the current scheme, most people can, even if they bought one property in the past, can still do Help to Buy on their second, third, or even fourth property. That once they start moving, that the first-time buyer scheme, the new one, which comes into effect, will specifically be only for first-time buyers and for them only.
Mm-hmm. So for question number 2, Alex, do you want to take this one? I've heard it's getting more difficult for a first-time buyer to get a mortgage at the moment. Could you explain why this is?
Yeah, the market's tightened up in general terms. So for all purchasers through COVID, lenders are a little bit worried about making sure that people's income is secure. So there's a degree of that. For first-time buyers, that's slightly enhanced because a first-time buyer doesn't have a well-established track record of borrowing. So if you think of a second-time buyer, they've had a mortgage for however many years, a lender can look at them and see how well they pay that mortgage back. You haven't got that benefit with a first-time buyer. That said, so long as first-time buyers have got some credit, so we would always recommend people have a credit card, even if they just use it just to buy stuff and pay it off in full each month. What that's doing is establishing yourself with a credit profile, and that enables you to sort of have for lenders to look at you in a better way perhaps sort of be more discerning about who they'll lend to. So similarly, if you've got personal loans, whether that be a car loan or HP, as long as it's well conducted, that is the sort of thing that lenders do want to see. So yes, it can be more difficult because of that lack of established track record, but not the end of the world. Lenders are amenable, subject to all the other sort of criteria.
Mm-hmm. And outside of Help to Buy, would it be difficult to buy a house with just a 5% deposit at the moment?
Unfortunately, yes. As Dean suggested, with Help to Buy, you only need a 5% deposit. The market now, there are no lenders, certainly in the new build world, that are lending anything above 85%. And even in the second-hand market, you're struggling to get anything above 85% as well. There's a couple of lenders that will come out with some 90% deals. But realistically, to give yourself a good chance of getting a mortgage, you're going to need a minimum 15% deposit outside of Help to Buy.
Mm-hmm. And apart from improving your credit score by getting a credit card, what other advice would you give to a first-time buyer trying to save for a deposit?
I think just to make sure that you're keeping all your credit clean. So any credit that you do have, make sure all your payments are made bang on time. And perhaps to get into the habit of saving as well. So getting a 5% deposit it is a challenge for some, particularly if you're renting and having to pay rent out as well. But equally, if you're looking outside of Help to Buy and need 15%, then clearly you need to save a lot more of a deposit. But that whole process of doing a regular monthly saving gets you mortgage fit. It gets you in a position where you're used to that regular monthly outgoing, and that certainly helps you in the longer run.
Mm. And what types of mortgages are available to first-time buyers? How long would you be expecting to pay it back for?
The beauty, typically a first-time buyer tends to be younger, certainly younger than me and Dean, dare I say. But mortgage lenders will generally lend up to 40 years, so long as you're sort of still going to be working for that 40-year period. So typically, a borrower in the sort of early to mid 20s could quite easily look at a 40-year mortgage term. Traditionally, mortgages always used to be on 25 years, but with doing it over a longer term, it makes the repayments that bit more affordable. Mm-hmm. So the sort of mortgages you'd be looking at, gone are the days back in in years gone by, there were the interest only or endowment mortgages that people may have heard of. Those are very much a thing of the past now. So people now look at a straightforward repayment mortgage. And the beauty with the repayment is every month you're paying interest to the mortgage lender, but you're also paying a bit off the capital. So you can gradually see mortgage coming down as the years go by. So whether you do that over a 25-year term, 35, 40-year, or even shorter term, that dictates what your actual monthly payments are.
Mm-hmm.
In terms of, sorry.
Oh no, carry on.
I was just going to say, in terms of the types of products out there, a lot of people look at fixed rate mortgages now. So you have options. You can either go for a fixed rate, or you can go for a discounted rate, where with a discount, it's straightforward. The lender offers you a discount off their standard rate. With a fixed rate, you're actually paying an exact amount for a period of years. Now, again, that can be anything from 2 years up to some lenders will occasionally have fixed term products of 10 years or more. But typically, people look at fixing for a shorter period, typically between 2 and 5 years. Again, going back to what Dean was saying before with the Help to Buy, with the Help to Buy loan to the government being over a 5-year period, we do see a lot of people who take out a 5-year fixed mortgage when they're going on a Help to Buy, just so they know exactly what the payments are going to be in that 5-year period.
Mm-hmm. That makes sense. And Dean, aside from a deposit, what other costs do you need to consider when buying a home?
I think it's a good idea to set yourself your realistic budgets for extras such as your removal costs. Usually with first-time buyers, you're not actually bringing one house to another, you're creating a house. These days with click and collect or deliveries, you've probably got most of that being able to be delivered to your door, probably up to 11 o'clock at night these days. So your removal costs are obviously not quite so much. There are legal fees. There are certain fees that during the course of any process you will not be able to get out of, and you want to pay the right amount of money for the right service in terms of your legal fees. any fees that may or may not be associated with a mortgage arrangement. You do have sometimes stamp duty, sometimes not, depending on when you're buying. Obviously, we're currently going through the holiday period, and that's caused quite a little mini boom so far. You've got survey fees which you'll need to have, search fees. Now, these are fees which the survey obviously is related to the mortgage. Sometimes that can be added to the mortgage, sometimes you have to pay it up front. You do have basic things like property insurance, which you would have never paid before. That's something you need to allow for and have a budget for. You then start to look into the slightly smaller areas of search fees, which your solicitor will need, and these are fees which are to ensure that in that local area a search is carried out to make sure that nobody is building something that would be detrimental to the value of the property at any time, and something that you may not know, but it's a search that's done by the local authority, through the local authority, and therefore brings up details of anything that's going to materially affect the property in that area. In principle, those are the main fees. And then there are certain things that obviously you may need to purchase as a result of any new property, depending on what actually comes with that property, what specification level that comes in, and that may well be various different white goods are included or not included, and carpets and floor and those sort of items.
Mm-hmm. And is it correct that even after the stamp duty holiday, most first-time buyers won't pay the stamp duty tax?
Depends on the price bracket where they're buying, and it depends on what the government decide to do once they're looking to close that at the end of March.
That's a great point.
Wait and see.
And back to you, Alex. Are there any savings accounts that are better for first-time buyers to boost their savings?
Absolutely, there are. The government want people to save. They want people to buy houses. So the government have brought out a lifetime ISA, which launched April 17. And basically, ISAs have been around for a long time. So ISAs are basically, it stands for individual savings account. It's a way of saving money without any tax on the interest, because it's sponsored by the government. But within the ISA rules, as I say, you can take out a lifetime ISA, which you can invest up to £4,000 a year. And it's £4,000 per person. So if you're buying jointly, you could invest £8,000 with your partner. And the beauty of it is the government pay a bonus of 25% on what you pay. So for every £10 that you put in, the government are putting in a bonus of £2.50 as well. So it's a very, very attractive way of saving money and helps build that fund very quickly. You can only use it for buying a house, although you can use it if you still had it when you were 60. You can actually use it to fund your retirement. But other than that, you have to use the funds to purchase a property, and it has to be in there for 12 months. But that really is the only restriction. So very, very good way of saving money.
Mm-hmm. And you can take the money out early, but you pay a penalty.
That's right. Yes. Yeah. And the other thing as well, you can invest it in different ways. So your traditional bank and building society type accounts were always sort of cash based, where you sort of just get basic interest. But we can also you can opt to have a stocks and shares version. So basically what that does, it invests in the market. And if you're prepared to sort of ride the ups and downs of the market, then potentially you could earn a lot more money by doing it that way than just purely investing in cash.
I must say, I've got a lifetime ISA and it's brilliant. You just put a few £1,000s in and then there's an extra 1,000 there. Thank you, government. And back to you, Dean. Aside from Help to Buy, what other help is there for first-time buyers at the moment?
I'm going to be waving the flag here for the new homes industry, which I'm sure is no surprise. But I think if you look around on the various different websites that there are, that you will find that the new homes house builders of all sizes will be able to offer additional help to any first-time buyer, that's as opposed to buying on the second-hand market. In terms of, if you're obviously, it's an expensive time. It's the biggest purchase that you'll be making for your first purchase. And having a brand new home is relatively maintenance free. obviously being brand new. And therefore that means that you don't have any ongoing costs for quite a considerable period of time. You'll also find that developers will do various different incentives to help first-time buyers. That may well be to help out with some what we call appliances, white goods in the industry, into the kitchen. And again, as I think I mentioned earlier on, floor coverings in terms of we use quite regularly, and especially up at Kingsfield Court, we've got a high level of specification, which is included in the purchase price. So we have a fully fitted kitchen, and that's not just the oven, hob and hood, which is the industry norm. We also have our own dishwashers. We also have washer dryers. So those appliances are already in the property and therefore included in the price. Therefore, it's not an additional expense that you have to go and have outside that. Furthermore, we've got an incentive where we're helping with solicitors' fees on purchases at Kingsfield Court, and also £1,500 towards the John Lewis voucher, so you can bond down to John Lewis and buy whatever you need for your first home.
Sounds brilliant. And back to you, Alex. So say, for example, a couple is trying to buy with a joint income of around £50,000. How do they know how much they can borrow?
The best thing is to speak to a mortgage advisor. I mean, as a very, very rough rule of thumb, lenders will typically go up to 4.5 times joint income. So on a £50,000 loan, 50,000 income, you'd be looking at 225,000 as a mortgage. But there's a lot of other factors that need to come into play, because lenders will look at what borrowings you may have. So if you're paying a regular, hire purchase or loan payment, that will come off your borrowing capability. It will also depend on credit scoring. So some lenders, what they do with the credit score is just looking at your profile as a buyer. So what do you do for a living? How long have you been doing that for a living? Where are you living at the moment? Are you living with parents or are you renting? So again, going back to what I was saying before about people establishing a credit profile, in addition to a credit profile is if you've been paying rent for a couple of years, then that's a good demonstration that you're used to paying out a large monthly payment. So again, lenders will look at you differently. Occupation-wise, some occupations are seen as higher risk. Self-employed, unfortunately at the moment, self-employed are being dealt a bit of a bad hand. Again, lenders concerned about the impact that COVID has had on people running their own businesses. So sometimes you're looking at a lesser multiple for self-employed. But the overriding thing, Marianna, is to speak to a mortgage advisor. And you'll find that all the banks and building societies will all have their advisors. Great people, and will do a very good job for you, but are just tied to one, to their provider. If you look for a mortgage broker, then a broker will look at the whole market for you, find you the best deal, and perhaps be able to push that thing a little bit further. So if you're wanting to borrow an extra, 10-15% on what you might otherwise do, a broker is best placed to actually help you achieve that.
And are lenders taking into account furlough at the moment?
Yes, there was a time when furlough first came out, lenders were all very much looking at the furlough income and saying, they were quite happy to lend against furlough. As the furlough scheme has changed, then lenders are a little bit more concerned about being able to lend to people that are still on furlough. So quite often what they're looking for is a statement from the applicant's employer to either say when they're going to be going back onto the full pay, or explaining exactly what their pay level is. So it has got a little bit tighter in recent months, to be fair. But yeah, you can still get a mortgage in that respect.
And Dean, could you tell me what a conveyancer is and why you need one?
You do need one, and the reason why you need a conveyancer or a solicitor, there's two terms there. Conveyancers tend to be slightly more larger scale companies that purely deal with property transactions, or a solicitor who will have a department which will deal with residential purchase, but they'll have the other disciplines of most solicitors in terms of family law, recruitment law, and a more multidisciplined. Generally speaking, you may find that the conveyancing option is a slightly cheaper option as opposed to employing a solicitor. At this stage, when you're going into your biggest purchase, generally speaking, I would go with a qualified solicitor. And it's important to do your research before you're purchasing. Most solicitors will be able to give you a quotation as to what their fees will be ahead of you actually buying a property. They will just ask you the price level that you're buying at and whether or not that property is either leasehold or freehold. There is a little bit more work to be done if the property is leasehold. If it's freehold, slightly less, and therefore a slightly lesser fee. Before you go down the road of actually instructing a solicitor, it's worthwhile doing, as Alex mentioned, getting yourself ready from a mortgage point of view, and equally get yourself ready from a legal point of view, because what you want to have is the conveyancer or solicitor that you use needs to also preferably be on the bank or the building society's panel of solicitors. That panel of solicitors is basically a recognition of that solicitor being able to act for both you in your purchase and also on behalf of the bank and building society with regard to the mortgage. A lot simpler to have that package together in one company as opposed to it being done by separate companies. So get yourself ready, make sure that your conveyancer or solicitor is also on the panel of the one or two banks or building societies that you're probably considering going through with your mortgage.
Court. Why is it a good development for first-time buyers?
Kingsfield Court, we're commutable, which has drawn a lot of people down to the development. So we're only 1 hour into London Marylebone, which has been a big attraction. So you can actually walk to Aylesbury Vale train station from the development, which has just been an absolute godsend for our buyers, looking at 230,000 for a large 2-bedroom apartment. I don't think you'd even get a walk-in closet for that, would you, in London? So that's been a big draw for us. Dean's stolen a few of my points already on this. So again, the £1,500 that we're giving towards the legal fees and the £1,500 that we can do towards the John Lewis voucher. If you're not keen on John Lewis, we can do that as an allowance on completion. So you've just got £1,500 once you've moved in, sort of spare free money to put that towards whatever you want to, maybe your moving costs and things. Where the development is situated, we've got a local Sainsbury's directly behind us, a couple of minutes walk. You've got a lovely little Esquire's coffee shop, all your local bits in there, a tanning bed place, which I could probably do with. And then we've got such a high specification, like Dean said, on the development. We've got Carndean flooring going through the hallways, the living areas and the bathrooms, which is a very expensive product that we've done as standard. All of your flooring is in the properties as well. And then, as Dean said, you've got all of your white goods, which is quite unusual for a developer to include that as standard. Most developers, we looked at some averages, and you really need to budget at least 7,000 for most new build properties to get the upgrades that we've put in as standard. So it's ready to move into for first-time buyers. You walk in the door, hang up some curtains, and you're done. You are in such a beautiful location as well. We've done a video which is on our website, which is well worth people having a look at. It is an absolutely stunning location. You're a few minutes away from the shops, a few minutes away from Aylesbury Town Centre, but we're surrounded by greenery, trees, the parkland. It is stunning there. So yeah, unless Dean's got anything more to add into that, that's pretty much my view on Kingsfield Court.
You mentioned also, Michaela, the size of the apartments, and again, just harking back to the 2 bathrooms en suite and the family bathroom, and the fact that the second bedroom is a proper double. It's not just a 1.5 bedroom and calling it 2, it's a proper 2-bedroom property.
Yep. They're incredibly large for looking at our competitors in the area. We're almost 700 square feet for our smallest apartment. So really, really great sizes.
And I think one thing that everyone's thinking about at the moment is access to outdoor space. Am I right in thinking that even with a flat, you get some access to a communal garden?
Yep, communal gardens, and our ground floor apartments actually had their own outside space as well, which was quite large. ground floor sort of balcony patioed areas. So yes, it's quite a few. And there's also parking with all of our properties, which I didn't mention before. You've got your own individual parking space, but there's also quite a lot of visitor bays on our site, which is fairly unusual for any new build locations.
Definitely important. And Michaela, what are the service charges and how much would you pay at Kingsfield?
Yeah, so for the service charges, every block of apartments, you would always have a service charge. It's to cover off communal cleaning in the areas, communal lighting, landscaping. As we said, we've got these beautiful communal gardened areas. So all of the landscaping and maintenance for those, and cleaning of the communal areas as well. And then you'll always have a bit of a sinking fund in there for any repairs that need to be made. So provisions for carpets to be replaced every 25 years and things like that. We've got a very reasonable service charge. We've got just under £910 a year, plus a £200 ground rent. On average, we've looked around, and you'd be looking normally around £2,000 a year for an apartment. But as I say, ours is coming in at 909 plus your £200 ground rent, which is very reasonable.
Mm-hmm. And apart from the white goods that you've mentioned, is there anything else that is included in a new home?
Yes. So say I've covered this question, haven't I? Sorry.
Mostly,
So,
yeah. Don't worry.
We've done
Apart from putting up the curtains, that's it, isn't it?
That's it. It's just a move in. And we have got hard hat tours that we're doing every couple of weeks at the moment, because the site team are still working on the apartments. We're fairly close to finishing up on the apartments now. It's just the communal areas. So for anyone that's interested, we've got another hard hat tour this Saturday, the 24th. Between 9 and 12. So anybody that's wanting to put a hard hat on with me and come and have a look. And we've got video tours available as well for all of the apartments. So we've just had one done of a property that's going to be our new show home soon. But it's really worthwhile buyers having a look at those links. And of course, if anybody wants to email us on that Kingsfield Court email address, I can always send over individual virtual tours and videos as well to show the specification that we've put out in all the properties.
Mm-hmm.
Marianne, could I just, sorry to jump in very quickly, could I just add that when people are buying apartments and mum and dad are maybe helping out, there will always be this warning over service charges. We operate a very transparent service charge arrangement. One thing generally what adds to a service charge considerably is lifts. If there are lifts in blocks, then you tend to find that the maintenance running of those is quite an added burden on the cost of running a management company. There are two things. There's a management company which is set up specifically to manage that development. There's a managing agent, which is somebody that is brought in to run the development for you. What we tend to offer as a choice to our residents as to whether or not they wish to appoint a managing agent or whether they run the development themselves. Therefore, they are in charge of their own destiny, and therefore they budget accordingly. So it's worthwhile asking the question when you're buying into a development, whether or not the development is managed by a managing agent, or whether or not the opportunity will be for the residents to get together and run it themselves.
Mm-hmm. I've got one final question for you all. What would be your top tip for first-time buyers? So Michaela, do you want to start with that one?
Yeah, so as I was saying before, our financial advisors, we use the Mortgage Bureau on all of our developments, but use the recommended financial advisors and solicitors that the developer has stipulated for you. We've got the Mortgage Bureau set up. They don't charge a fee to our customers if we use them. They have, with the Help to Buy scheme, if you fill out the forms for the Help to Buy incorrectly, it takes about 2 weeks for it to come back to you. It's then another 2 weeks to get the approval for it. So having the recommended financial advisors means that these forms are going to be completed properly and on time. I've written all of this down, and that they've got access to products that you wouldn't be able to find on the high street yourself. They specialize in new build. A lot of financial advisors, your dad's recommended you their friend, they don't specialize in new build, and it really does hinder us. We've had one recently that didn't realize Santander couldn't work within the incentives that we'd offered, and it's just wasted 3 weeks with that customer. A lot of new builds as well, the developers will start taking away incentives, or possibly you risk losing the property if you don't meet the deadlines for exchange of contracts. So it really is worth using recommended solicitors. They know the contracts inside out. They've already had inquiries for the site, so everything can be dealt with very quickly, very swiftly. So yes, always use the recommended financial advisor and solicitor for that development.
Makes sense. And Dean, what would yours be?
Just get ready. Because once it all starts and you found a property that you want, you really want to, as Michaela said, keep that property and get ready for it. Do your homework. Get yourself, look at your mortgage, get your print. You know where you're going to go with that. Get sorted with your legal side of things. And in terms of those people looking to buy, not instantly but fairly shortly, just set yourself your realistic budgets in terms of your savings. Set yourself some savings at a realistic level. If you find that you can add to it, then add to it. That's positive stuff. If you set yourself a budget that's too high and you're not making it, you'll start to feel negative about the whole experience. So just be realistic and get yourself ready.
Brilliant. And Alex, what would yours be?
Yeah, really just picking up on what both Michaela and Dean have said there. It's all about being mortgage ready. So at the very earliest opportunity, speak to a professional mortgage advisor that's going to let you know what you can and can't afford. Nothing worse than sort of going in and seeing the apartment of your dreams and then finding actually you're going to be £25,000 short of it, and then your hopes are dashed. So speak to somebody early on, get yourself ready, understand what your requirements are, and then you know what you can go and actually and look to buy.
Well, those are some great tips. I will be taking them on board. Thank you everyone for joining us today and taking time out of your lunch break. I think that's all we've got time for. And good luck with your house hunting.
Very welcome.
Thanks, guys.
Thank you.
Thank you.
Bye.
Bye.